Tim Waterer is Chief Market Analyst at KCM Trade and joins us now from Sydney. Hi there, Tim. Now, a turbulent start to the week for Asian stocks. Why are we seeing such a sharp sell-off, particularly in semiconductor shares?
Nice to be with you. Yes, turbulent indeed. There's really a multitude of factors, and you mentioned a few of them in your intro there. So the strong US jobs numbers has investors looking towards rate hikes, escalating tensions in the Middle East rather than de-escalation. And as far as the tech sector goes, I think we can trace that back to Broadcom's results last week, where the chip maker did have a record Q1 revenue figure, but they didn't upgrade their forward guidance, and that was enough to really unsettle investors and cause people to question really whether the momentum is starting to halt a little bit there. That could be a little bit premature, but I think that's what kick-started the renewed skepticism regarding AI valuations in the US. We saw that on the NASDAQ on Friday, and that flowed across to a lot of the Asian markets today. And of course, we did have a number of indices hitting record highs last week. So I think that, combined with higher oil prices, has really given investors several reasons to take profit off the table. So it's really been a cascading effect, basically, yeah. High oil prices, rate hikes on the way possibly, and no resolution to the war yet.
Now, given that most of the decline is in tech and semiconductor shares, does that point to a slowly burst of the AI bubble?
I don't think we can come to that conclusion yet, because if you look at the Q1 earnings season in the US as a whole, it was a pretty good story overall, I would say, and the stats back that up with 84% of tech companies surpassing earnings expectations. Now, there are a few negative headlines there, and they came last week. And I think that's what the market is focusing on right now, is those negative results. And when I say negative, it's basically just the company not upgrading its forecast. So I think the stocks were priced to perfection. And given the record highs, I think that's just encouraged a lot of investors to take profit off the table. And once that selling starts, it creates a lot of momentum, which is carried across to markets today. But yeah, I think it's a bit too early to call a burst of the bubble yet.
Right, and meanwhile, jobs growth unexpectedly surged in the US last month, while inflation data is in focus for this week. How does that weigh on the Fed's policy direction?
That's right. Of course, the Federal Reserve, they have the dual mandate of inflation and employment. We got the first of those, I guess, key readings last week with the very strong non-farm payrolls figure coming in nearly 100,000 more jobs created last month than was expected. And this week we get the US CPI figures, which we expect we'll see that rise from 3.8% to above 4%, maybe 4.1 or 4.2. So I think if that is the case, combined with the hot jobs market, there's really no reason for the Fed to consider any dovish posture on rates at the moment. So I think if this trend continues of a hot jobs market, higher inflation, then I think we will see a gradual pivot from the Federal Reserve to a more hawkish stance. Rate cuts potentially on the way later this year, and that could further sour the mood of investors.
And gold prices are continuing to fall, of course. It's now falling below $4,300 an ounce. How should we be assessing that at this point?
That's right. Gold seems to have forgotten its safe haven status at the moment. It's really suffering from its highly liquid status, really. We're seeing that volatility that we've talked about is leading to margin calls and liquidations, and other assets, gold included, positions in those are being closed to cover those troubles elsewhere. So that's part of the reason why gold is falling. We've seen the dollar index, the USD, that's been moving higher, pulled higher by the rising oil price and higher US Treasury yields. So they tend to have an inverse relationship with gold. So when they're going up, gold's going down. That's what we're seeing at the moment. So, but I think we could see some bargain hunters come into gold around these current levels.
Tim Waterer in Sydney, great to have your analysis as always. Thank you.
Thank you.